Yo, welcome back to Majesty Mentorship on Beginners to Pro. This is lesson 9 of 15, and then we are going to be discussing about fair value gap. So if you are yet to watch our previous lesson, please do so to watch it, because this is like the continuation of it. And also, if you are new to this channel, subscribe right now. You understand that is the only way you can appreciate me for doing all these videos. So let's get started right now. So when we talk about fair value gap, I think I should give you guys the definition before going to the practical aspect. So what is fair value gap? Fair value gaps occur when a price leaves a specific level where there's less trading activity seen. For example, during our last video, we discussed about price delivering algorithm, of which if price is going towards the direction, price after like to be delivering every single candle, you understand, and then it all depends in time frame too. So that's just it, and then we make use of 3 or more candles, you understand. So that's just it. So when we talk about fair value gap, it's just like when price does not deliver each candle, so the gap in between is called fair value gap, and only has one directional price movement. So if price is going towards the direction, like you have been seeing fair value gap in between, that's where price is going to like to return to, and then to start going towards that direction again. So that's just it. And then fair value gap fair value gaps present new trading opportunity. For example, if price going towards the direction, and then maybe you take a bullish direction, bullish trade, and then price going towards that direction, you're already on profits, then it can give you more room to like to take multiple position, you understand. Because once you understand fair value gap, you understand every single place that price have to come into like to fill those gaps, you understand. So that's just it. And then especially when coupled with other block, so like you have to notice each fair value gap you have to be using, it has to like to couple with what other block, so it has to go in and with other block, you understand, because there are lots of other block that always form fair value gap that always form in between share. The price can just like clear everything at once. And also if you set entry at that moment, price is going to like to eat your stop loss, you understand. But every single fair value gap that has what other block is somehow strong other block, you understand. So that is the only fair value gap I trade. I don't trade in between price trade, price level that price will like be given a gap, and then price have to return back to it, you understand. There must be what an order block. So once you have other block in the market, you can take the trade, you understand. So let me give you guys an example before going to the practical aspect. So if you check this chart right now, you can see that price was going what all the way bearish, you understand. Then if you see this two bearish candle, before the two bearish candle, you can see one bullish candle. Then you can see that the bullish candle, and then the third the second bearish candle, price does not deliver in between. That is why I draw the gap there, you understand. Then you can see that price return back to that level just to deliver the price there, you understand. So this gap here is what's called fair value gap, that is FVG. So price have to return back to that gap and then continue its movement. So I'm going to give you more example when we get to the practical aspect, but this is just like the simple this is how the fair value gap look like, you understand. So that's just it. So let's go to the practical aspect right now. So let me find a fair value gap for you guys. Okay, I've seen one there. So okay, so you can see during our last class we discussed about price delivering algorithm. You can see that price does not deliver here. Can you see? Price does not deliver here. We have what, a gap here. So let me just draw a box there. We have a gap here. So every single time you have a gap like this, you'll be expecting price to return back to it, and then we have what, other block here. So what made this one other block here? What made this one other block here? We have what, a break of structure here. So can you see that it's going in hand to hand together? So we have break of structure. So let me just BOS break of structure. I've discussed about this. If you don't understand the reason why I write BOS here, or the reason why I said this is a break of structure, please do so to go back to our previous lesson. We have talked about what a break of structure, you understand. I think lesson 3 or 4. Yeah, so you can see that price return back to it, and then we have what, other block here. Can you see that price return back to it? So you can be asking me, how can I take this trade, you understand. So if you want to like to enter into this trade, just set up what, your entry in this where there is a gap here, the place you're expecting price to fill. So sorry, let me just draw our entry zone. So you're expecting price to fill that level, then your stop loss have to be in the swing guide. So let me change the color. So you have to like to set up what, your entry here, because that is where we are expecting price like to fill, you understand. And then the reason why I'm setting my entry there, just like because of spread, sometimes When you talk about fair value gap can fill all the gap completely, and then sometimes you can just tap into the gap without filling it, you understand? So you have to understand all these things. So you just have to set up what your stop loss in the swing low, in the swing high here. So and then your take profit, I've discussed about this multiple times during our videos. Like if you want to set up your take profit, just find every single place there's liquidity in the market. You can see we have what liquidity here. So you have liquidity here. So we have what liquidity here. This red line means liquidity. Then I can just tap in between. Let me just give the symbol S. S means what liquidity. So we have what liquidity here. Then just set up what your take profit there, because you'll be sure that price is going to go below it. So if you don't understand liquidity, I did a video on it, so you can do so to go and watch it for better understanding. So to understand liquidity and then the reason why price outside to go below it. So that just it for this what bearish moment. You can just set up what your entry here, and then this 1:9. Sorry, you can see 1:9. You can see 1:9.18. So it's just easy, you understand, to be taking all this ratio. Then if you understand higher time frame perspective, you can see that price still continue is down. Price still continue moving what on a bearish direction, you understand? So that is just it. But if you understand what higher time frame perspective, you can like take a trade like this. It's look very nice trade, you understand? So that is just for that. So let me just look for what a bullish trend, and then give what a fair value gap there. So I think let me just find one there. Sorry. So we can see right here we have what a fair value gap here. Can you see? You have what a fair value gap here. Can you see? Price does not deliver in between that place and that let me change the color. On that red candle, red or green candle, you can see that price does not deliver there. Let me increase this. Oh, sorry. So we can see this fair value gap right now. And then if you understand this market, we have what a break of structure here. Can you see? I don't want this video to be long, so I have to be fast. We have what a break of structure. We have BOS. So we have BOS. You can see we have a break of structure. So right now we're expecting price to continue moving higher, because you have what a break of structure here, you understand? So right now, and then we have what other block. According to the definition I gave you guys when I was discussing about fair value gap, I said it has to be, especially when coupled with other block, is like a stronger fair value gap, you understand? So because a lot of people don't understand a strong fair value gap and then a weak one, you understand? Because price can just like take a fair value gap and they're still continuing going towards that direction. So that is just for that. So right now I just want to show you an example on the bullish trend, because I did for bearish trend. So that is just it. Then we have fair value gap here. Then we'll be expecting price to return back to that level, and also we have what other block here. So let me just delete this and then let me draw other block here. So every single time we have fair value gap and other block together, that other block is what a strong other block, you understand? So price is likely going to respect it. I think like 80%, you understand, 80 to 90% price is going to respect it. So that is just it. So we have what a break of structure. That means we have how many confirmation? We have 3 confirmation right here. We have what number 1 a break of structure, number 2 we have what fair value gap, number 3 we have what our order block. So you are going to understand that price is not going to what to break this previous low here, you understand? So you have to if you want to set up your entry here when the starting of the order block. That is the last bearish candle. If you don't understand anything about other block, go back to watch our previous lesson. I've discussed about that. So we have set up your stop loss in the swing low, because you're not expecting price to go below it, because price did not respect this level. Price end up breaking it. Hopefully you can see that this high is respecting this high. Can you see? But price end up breaking it. So what's responsible for it? This is the other block. So that's just for that. And then if you want to set up your take profit, you have to identify every single place there's what liquidity in the market. So we have what liquidity here. So your first take profit is going to be here. Then your second take profit, if you still want to hold the position, it's going to here. But price is going to retrace a little bit before taking this. And then okay, that is just it. So you can set up what your first take profit at where the first liquidity here. So your first take profit is there. Then your second take profit, let me just increase it. So already this 1:10, can you see? Risk ratio 1:10. It's very easy, you understand? Once you understand all these things, you can be risking 1% of your account and then we make it 10%. So that's just it. And then your second take profit, the second take profit is here. Yeah, these are second take profit. Can you see that price reverse a little bit then before getting to our second take profit? So that's just it. So if you have any question concerning this, you can ask me in the comment section. And then if you're yet to watch our previous lesson, if you don't understand also, please try to watch our previous lesson. So in our next lesson, we're going to be discussing about all these big gap here. Can you see we have what a very big gap here, big one. So in our next lesson, we are going to be discussing about this. So can you see we have a lot more? So that means if you're new to this channel, don't forget to subscribe to this channel. And then if this is your first time, like this video and also comment in the comment section that this is my first time watching your video. So I'll be glad to treat you better, to treat you nice, you understand? So so that is just it. You can see all these big gaps here, you understand? We're going to be discussing about that in our next video. So subscribe right now and like this video. So you can also share this video with your friends and family that you want them to understand smart money concepts. So see you guys in my next video. Bye.